Market structure is a key aspect of what we talk about on TabbFORUM. Yesterday was a big market structure day. We had the SEC having a roundtable discussion on decimalization and the whole idea of the Jobs Act, and how our small cap stocks or the trading of small cap stocks are they being disadvantaged by decimalization and too tight spreads. With me to discuss this is James Toes. Jim is the president and CEO of the STA, and I want to thank you for joining us.
Thank you, Larry. Thank you. Thank you for having me on.
So it was a great discussion. Yes. I think we had a lot of different points of view. What's your thought?
Oh, listen, we were very encouraged by what came out yesterday in the conversations. I mean, I think it brought some good focus back to the issuer, and we started talking about the functions of the marketplace as it pertains to capital formation versus just pure execution. And I think that the forum of the roundtable, with it being webcasted, I think created an environment where the participants were, for the most part, left their business models at home, and really talked about ideas and opinions that are best for the end investors, all investors, and issuers. So we're encouraged.
So what do we think? So what are the big issues? Certainly the issues are that small cap stocks spreads are artificially narrow, and because of that, it's hard to raise capital. It's hard to support them. Do we think we're going to wind up? How do you think the color of the roundtable discussion will impact the SEC? Will we see a pilot?
Yeah, well, I think we will see a pilot, and I think what was one of the issues that really came out yesterday was it really focused the pilot should be focused. What we feel is on liquidity in these types of securities, and the idea that the study should be focused on the amount of research coverage, and that creating incentives so that research coverage will create some type of demand out there. That's a secondary goal of the pilot. The ultimate goal here has to be about, in our opinion, about creating liquidity in a class of securities that is not available in today's marketplace. From the liquidity, you'll get investor confidence. From investor confidence, you'll get more investment transactions in these securities, and then from that, you should, the benefits for research will pick up. Right.
So we think that research is really a trailing factor and not a leading factor to people buying these assets?
Yes, yeah, and we've been very cautious with the SEC with this. If you're going to, because we do think that even if they were to start a pilot and there was with a meaningful amount of securities, that research would lag by months, 6 months, 9 months, a year. It takes research analysts months before they put together research reports, and plus firms are going to want to see if the economics are even there to even bother doing it.
One of the interesting comments I thought, and we talked about this a little earlier, was the perspective of the CEO of Cowen. Why don't you talk a little bit about that?
Yeah, I mean, if I had to give an MVP award out, it would have been to Jeffrey Solomon for his answer on the panel yesterday, because his answer was.
Well, what was the question?
Well, the question was, I don't remember what the question was, but the answer was really good.
Okay.
But the answer, because the answer came from the perspective of a CEO of a small cap company that happens to be in financial services.
Right.
And the response was in response to comments about the lack of research coverage.
Right.
And Jeffrey's comments, as speaking purely as a CEO of a small cap company, talked about how we had a very large event occur in his company this week.
They had an acquisition.
Right. And there's no research analyst in his company except for one that for him to talk to about it. And I think that what he said was very representative of probably what hundreds of CEOs feel today, whether they're making widgets or whether they're doing investment banking.
In that there are transactions, there are issues that are important things within their business that are occurring that they have no one to even get this word out besides a press release.
That's right, and it's also the other side of the trade. Also, the other side of the trade here is the opportunity cost, right? So there are investors out there that could be looking for these types of companies to invest in that they don't know anything about, or they may find out about a company. Like many of us do, we hear a story, we start looking on the internet, and we can't find any research coverage on it, and then we look at the quote, and it's it's a tight spread, but it's 100 shares by 300 shares, and then you say, I don't want. Why do I want to buy that stock?
Right.
I'm going to move on.
Right. And that's actually a big issue because to a certain extent, if people aren't buying the stock value is probably not fully representative of the actual value of that stock. The board members' options aren't necessarily valued properly and the stock's not valued properly. And, the management eventually says, like, why do I need this? And gives up, goes to Silver Lake like Dell and gets bought out for hopefully $24.5 billion.
We should all be so lucky.
Yeah.
Listen, I think that also was a very good point yesterday too. I mean, they talked about the size of the private equity market and that market, obviously, as IPOs have gone down, the amount of that market has gone up. Can that market keep going up? Is that market big enough? Are there enough assets there to satisfy this capital formation that our country needs to create 4.5 million jobs? I think someone answered that question pretty clearly. The answer is no.
Yeah, actually, I heard that answer exactly the same way, that the private equity market isn't big enough to really outpace the public markets. So we wind up with a pilot program. We wind up widening spreads, probably a nickel, who knows, plus or minus for a number of stocks. Now, you have a very electronic market-making operation that manages most of the quotes in the marketplace. Now, if you're thinking about research and you're thinking about traditional support of, old line market making, it's like you, me, and a couple of guys, making a market. We'll put a couple thousand shares down. We'll provide capital. But now all of a sudden, if I wind up with a nickel spread in a stock that used to be a penny spread, is it just the HFT guys just making a wider market and we're still boxed out because they're co-located and do we just wind up with the HFTs pocketing all the money with the wider spreads?
Yeah, well, so that's a good question, right? So it's always hard to predict, how things are going to result, and that's why obviously we want to do a pilot study on this to study the what happens with it. But I would say that a couple of things. One, you brought up a lot of points, right? So one, the Jobs Act was very specific in that they wanted the SEC to study market centers, trading centers, and not necessarily just market makers. Okay. So today we do have, market making is highly electronic today, right? The days of manually updating your quotes are gone. You have market makers out there, but we've always had transitional market makers in the marketplace, and we've always had I believe that someone used the term yesterday, liquidity providers. So we've always had, if you went back to the 90s, you had the Herzogs, Spieleats, and the Knights of the world, and you were trading side by side with the Citigroups and the Bank of Americas. That basically is somewhat still intact right now. Now you need to find incentives, in our opinion, for both these people, for both these highly transactional people, HFT, electronic market makers, and also the traditional and the traditional market makers type people, and that we need to be thinking about it in looking at both parts of the marketplace.
Well, it'll be interesting to see how it all shapes out. Hopefully, we'll wind up with a pilot program. We don't. At least speaking for myself, I'm not sure we want to just take everything with $1 billion, market cap and just say, poof, tomorrow we're moving it to a nickel or a dime.
No.
I think testing is probably a good thing.
Yes, testing is a very good thing.
And and we'll see what happens. So with me to discuss the SEC roundtable on decimalization is James Toes, President and CEO of the STA. And I'm Larry Tabb, founder and CEO of TABB Group, and thanks for joining us.